Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's have a look at the gold market as well. So in general, setup that we have discussed recently is working, stands on the progress. This market is moving back to the 2330 area as we have suggested. This is minor bounce on the daily chart. Euro context remains bearish. We're watching for a possible downward continuation and working over the double repo sell pattern on the weekly chart. But as usual, or better to say, as often it happens, right before important events, fundamental events, market starts showing some contradictive patterns or showing contradictive performance. Because if you take a look at the gold market together with the euro currency, you could see that on euro currency we're watching for, or at least it stands in place, potential bullish pattern. It's reverse hand and shoulders. While on a gold market we have double repo sell, suggesting that it should be downside action. The problem is that actually currently we do not have some gold specific factors or euro specific factors that could lead both markets to move in opposite directions. But obviously today reaction will be directly on the value of United States dollar, because it will be CPI in United States and it will be statement of the Central Bank of the United States. So correspondingly, as euro currency, as gold market should start moving in the same direction because of the same reason, changing of the value of United States dollar. And from that standpoint of view, this is a bit tricky moment. Either hand and shoulders on euro currency will have some problems, maybe it starts failing or something, or on the gold market, the bearish setup might be under question if it will start moving to the upside. So from that standpoint of view, as we said, 24 area currently is vital for the gold market, and somehow we will see jump up, returning back to the top. Very probable that we will get the failure of the bearish setup. So this is the important moment that we have to keep an eye on in the higher time frames, on the weekly and on the daily chart. On the intraday charts, currently everything mostly stands the same. So if we'll take a look at the 4-time frame chart, we're still watching for this pattern. Here is obviously we do not have any thrusting action, so something of this kind. So this is purely retracement feature type of action. So from that standpoint, it absolutely brings no doubts to downside major pattern, so it doesn't break it. On the hourly chart, currently market is forming. Target has not been reached totally, so just a couple of backstands until this area is now at 23.14, 23.25. But now market is forming the pennant. So inside the pennant, you easily could recognize some kind of the butterfly or something. This usually happens when the market is forming triangle. So supposedly it might be some upward continuation and completion of this pattern, at least, if of course something greater will not happen, which is actually could be, because we have really important events today. So just keep an eye. The same contradiction we have on the dollar index and the 10-year bonds. Today I already have shown this in a video in euro currency. I'll show you again. So just take a look what we have. If on a dollar index we have upward action, so dollar is rising, on the 10-year bonds we see that yields are dropping. So usually they also move in the same direction. So it means that somewhere in one or another market there's some wrong direction. So and probably it will be fixed in the nearest time as a result of today's data release. So somewhere market is moving in the wrong direction, because dollar can't rising in price when its yield is moving lower. So usually they move together with the interest rates. And by the way, another contradiction moment is take a look at on the dollar index. So sorry, on the gold. If gold is dropping, it's usually happens on the rising of the yields. So, but here we have decreasing of the yields, while in the gold market we do not have any significant upward continuation or something of this kind. Other words speaking, those of you who do not want to accept the risk of the possible volatility, choppy action during the report, CPI report during the Fed meeting, it will be better to sit on your hands and see what will happen. Wait when the data will be released. If you're ready to take risk, well, in this case, you could try to possess yourself with the patterns that we have discussed. So once market will complete this ABCD pattern, maybe you could consider chances for possible taking the short position. But since we can't control the data that will be released, and probably they will become actually the major driving factor, that brings sufficient risk in the current trading before major data will be released. So let's see what will happen.